or a neutral edge. So on the Russell 4-hour time frame chart, the biggest takeaway I would want you to understand is that we are technically underneath this double bottom neckline here, which as we know is loosely around 2050. 2050 is also the key weekly level. You can see it acted as support, and now you could even make the argument that this is just a double top neckline and we're underneath it, right? So as we're opening week underneath that level, I would tend to think that this is more downside pressure specifically for the S&P 500. So not direct to the NASDAQ, but to the S&P 500, the Russell remaining weak underneath 2050 on the futures is a bit more of a concern. So let's say, here's the high level overview of the if-then statement for all the programmers, right? If the NASDAQ is sideways in range and the IWM is weak underneath 2050, be a little bit more bearish biased in the S&P 500. If the NASDAQ is breaking in the upward direction, if the NASDAQ's strong and the IWM is neutral here or even recaptures 2050, then you've probably got to flip to being bullish in the S&P 500, right? So that's the relationship between them. But as of right now, I think that this is keeping us with the bearish in the S&Ps, still neutral in the NASDAQ. But IWM, as long as it's under 2050 on the futures, that's your concerning zone. Let's drop it on down to the hourly chart. Let's get granular here and really see what's going on. Obviously, hourly downtrend, big lower high was set. Also, this is like totally on me. I don't know why. Well, I actually know exactly why. It's because I don't actually trade the Russell futures, that I don't have this gap drawn in here. And it's just not like top of mind, but let's do this together. I'm gonna make this a quick transparent box. Let's go about 80%, there we go, and let's bump that up to the end of the month. There we go. So this yellow box represents an unfilled gap, right? This is the CPI gap down from Wednesday of last week. That gap remains unfilled. So a little bit of relative weakness on the Russell compared to the NASDAQ and the S&Ps, which both filled their gaps overhead, right? So that is worth understanding. In terms of the levels, as we get granular here, obviously 2050 can continuously produce a lower high. Even if we break out over this overnight high, something that does this and rejects for a lower high is just, highs, lower highs, keeps the gap unfilled. It's just another lower high. So being mindful of that. Let's go on down to the 15-minute chart. Let's get even more nuanced here. Any big takeaways on this time frame? Not really. I'd say that we're obviously opening in range in value. So you want to be a little bit more patient out of the Russell. There's not an obvious like, hey, this is your inflection point off of the open. Not so much. So I'd be very open-minded to opening range that forms and then some sort of break from it to sort of be the next tell. Right? What do we do here at 2015? What do we do up here at 2045 up to 2050? All right. The nature, unfortunately, of the Russell is to oftentimes give us a move in the first 5, 10, 15 minutes of the day. 5 to 15 minutes, we'll just say over here. So I wouldn't, like, if you're actually trading the Russell and you're not just using it as an indication, I would sort of keep in mind that even though the indications would be for opening range in here, neutral two-sided trade to resume, the nature of the Russell itself is technically, one that's more like, let's get an opening drive, up or down. All right, so I'd just be keeping an open mind for that. Again, 2050 and 2015 on these lows. All right, that is your Russell futures, and as of right now, a little bit more of a bearish input for our broad market as a whole. Let's take a quick look at the IWM cash ETF. We've got 900 on the clock, and then we'll jump on into our service with companies. We'll also take a look at GS here, Goldman Sachs. They reported earnings this morning, and we'll see how the stock is doing. So anyways, IWM, you can see that the weekly level, the big line in the sand that we've been talking about for a number of weeks now, it feels like a long time as we've tried to balance above, threatened it over here, threatened it over here. We're just right at it. We are right at it. It's between 199 and 200 flat. I would really give it the full dollar zone, because on the weekly time frame chart, we don't want to really like split hairs here. This zone can resolve. So let that resolve. It's the top of the balance range. If we can hold up over it, fine. That would be like a huge tailwind for the S&P 500. If it doesn't hold the 199-200 zone, obviously concerns emerge. And one of the things, again, I'll continue to bring this up just because I think it's relevant here, is the XRT broke down aggressively, right, last week underneath its top of the range. Now, retail, typically smaller cap companies. So is it directly going to impact the IWM? I don't know about it's not going to signal a one-to-one break, but you can see how the charts are at least similar compared to, let's say, the tech sector, right? So retail is one of them, and then the XBI, biotechs, also very similar as well, more aggressively breaking down underneath the top of the previous balance range. So the big watch here on these two individual sectors, biotech and retail, would just be, can we get lower highs to cement, that would start to emerge as a head and shoulders bearish setup. That's bearish pressure across small caps, and obviously reducing some of the tailwind for the S&P 500. So enough of the higher time frame analysis. Let's go back on down to the hourly charts here on the IWM and see what we can see. So 199, if it can hold, then I'd be inclined to think that maybe, just maybe, this is look below and fail on the 2-day balance range. So Wednesday and Thursday, my apologies, my days mixed up. Wednesday and Thursday produced a 2-day balance range. We didn't really exit that high on Thursday. We tested it, but we didn't exit through it. If this is going to be a look below and fail, any higher lows that can hold here this morning over 199, if we get like an opening wash that supports at 199, that sets this up for a move back into the top of the range at 203. Now, when we get to 203, of course, we have to start thinking about the gap close overhead, but what's the idea? Highs, lower highs, lower highs. This technically was holding as a lower high, but coming from the lowest low in the cycle, you could still get a lower high here. Right? That certainly would be a daily lower high on a gap fill reversal if it wants to present itself. So 204.50, it's near the upper edge of this week's expected move. I would be thinking about either market slowdown or even just straight out reversal around that 204.50 if we get it at all. Right, as of right now, let's keep an open mind. We've still got to see a bullish setup down here that keeps us inside of the 2-day balance range. So probably over what? What's the low here we want? 199.85. So we've actually got a little bit of work to do. You guys know the rules up here. Rule number 1, if you know it, put it in the chat now. But let's go with 199.85 here on the low of this. If we can hold up over that, right? If we can do something that does this, that's probably where the trade sets up. So consolidation here, break higher low over 199.85. Looking for that rotation back up towards the 50 SMA. Bottom of the gap, 2-day highs, 203. Right? There we go. No shoes, that's right. No shoes up here in the penthouse suites, not on the finest Persian rugs. We had to import these things, so, we gotta keep them nice. No shoes up here in the penthouse. Yes. All right, that's IWM. That is the small caps market, obviously. So let's talk about downside, because we didn't really touch on it too much. But just drifting to the downside, obviously, is bearish pressure for the S&P. So underneath 199, you've got to be open-minded to further downside. Right? Should be fairly straightforward there. All right, with 9:04 on the clock, let's jump on into the core list of companies. Apple is up first on the chopping block. And iPhone, Tim Cook, making some headlines this morning, but it's not really doing much in terms of where the stock is opening relative to the Friday range. So just in the midpoint here, I don't think that there's a clear edge out of Apple, on this particular open. I would be very patient this morning and look for either an interaction at 177, or if it does break down, I'm technically open to the idea of a higher low after this ripping rally over 173.75. So I would keep an open mind to it, but we're just not there yet. I can't spot, visually, I can't spot the edge here off of the open. If you can quick draw McGraw this thing out of the gates, then be my guest. But, obviously big pop to the upside, a little bit of a pullback, afternoon rally. We're just opening kind of in that range. So I don't see the obvious setup here on Apple out of the gates. Maybe to get to 177, there's like a 5-minute flag that forms in here, and you get there. That's great. We can't speculate to that magnitude on the pre-market session. So one step at a time. 177, 173.75. I would probably be thinking about consolidation and digestion of this overall move. Something I haven't done, which probably could do, is just drop a fib on this entire move. Let's start from the low of Friday, just because that's where the momentum really was. Into follow through high. So 38.2 is loosely aligned with that 173.75. So healthy bull flag consolidation totally takes place up here. I would not write that off as a possibility. So Apple, higher lows over 173.75, definitely worth keeping an eye on. Next up, Softy, what's going on with Microsoft? Stuck in the balance range, really not doing anything impressive in here. It would have been best if on Thursday that higher low could have held, and then this off of the higher low above. Obviously not the case, and as of right now, we're opening back in the upper 50% of this balance range overall. So two trades really become top of mind. Break and higher low above, or a washout into 423. Look for basically a rinse and repeat of the Thursday session, right? If we can spot that higher low over 423, I'd be willing to try it again. I get it's the midpoint of the range, but it's just I don't know what else you would do here in Microsoft. I wouldn't try to be short at 423 unless there's a clear breakdown and lower high underneath. So you need to see that breakthrough first. and then the lower high set. So as of right now, a bit more neutral to trying to look for a long out of Microsoft. I think relatively to the market, if we just look at a daily time frame chart here, I think this is important. Relative to the market, this building a block in the upward direction is constructive. Like, that's very hard to ignore as progress in the upward direction, right? So building block moving higher, Lincoln Logs, stacking, Legos, whatever fits your fancy. Move on down to Google. Let's take a look over here. Google is also another beautiful uptrend, right? Look at just lows, higher lows, higher lows. This one a little sloppy on the gap down, but recaptured very nicely. Higher lows being found over the breakout point, right? So looking for the same idea. This Friday pullback was the higher low. Now looking for upside. The only issue with this is that you're sort of buying it at the equal high. So I would almost prefer a couple of things. A very shallow intraday pullback that then retests this. That way we can manage our risk intraday with like a stop, entry, target into blue sky territories. Or just a break and higher low over 159.50. 159.50. Oh, look at that. Oh no, it's the Fibonacci tool. I was going to say, Thinkorswim's giving us the round number. Beautiful on a Monday morning. Let's see if we can get it again. There it is. Nice. 159.50. Round number is only. Nailed it on the first click. So the idea would be, again, opening at these highs, be very open-minded to a pullback first. If we can get that pullback, great. Equal high reattempt, looking for the break. Or if you're
Order
with a little bit more confidence, the higher low above that level is also making a lot of sense in the